Welcome back to the channel, everybody. Trade the Matrix. This is Morpheus, and this is my Liquid Sundays SPX market rundown for August 23rd, 2026. Just a quick reminder, this is not financial advice, and I am not a financial advisor, so please do your own research. With that out of the way, let's jump right in. Last week, August 17th to the 21st, the Dow closed at 53,277. S&P SPX 7674. The Nasdaq 26,180. Key drivers: rising treasury yields, 10-year at 4.74, 30-year multi-decade highs, US debt over 40 trillion, higher oil from Iran tensions and tech under pressure. Friday bounce on business data and retail crypto strength, but still closed the week lower, snapping 3-week win streaks in the S&P and the Nasdaq. Key levels heading into next week. S&P support 7640, that's the low from last week. Below that, we have 7620 and 7600 key psych. Below that, we have 7550. Resistance, key psych 7700. Above that, 7,800. Above that, obviously, new all-time high, potentially. NASDAQ support, 26,000 to 26,100. Resistance 26,500 plus. Dow support, 52,700 to 53,000. Weekend developments, it's been quite quiet overall. Ongoing U.S.-Iran tensions, sanctions rhetoric, Strait of Hormuz risk, keeping oil elevated. No major market moving news as of right now. For the week ahead, we do have earnings focused NVIDIA Wednesday after the close. That'll be a key AI test. Also, Salesforce, CrowdStrike, Inuit. Data we have Tuesday, consumer confidence, home sales. Wednesday, we have core PCE. That's obviously key inflation data. GDP second estimate. And Thursday, jobless claims. Big event, we do have the Jackson Hole Symposium. Fed Chair Warsh speech will be important on Friday on policy and inflation. So, going to want to watch yields, oil, Iran, NVIDIA results, PCE, Fed speak for direction, potential volatility. Let's jump right into the chart. Weekly chart here, the SPX cash session. We got previous week high around 77.90, previous week low 76.40. So this is within this breakout range here. If I take my fib tool, take the high to the breakout support level here, you can see we retraced almost the entire move. Previous week low is going to be our first major support level here, and 76.23 is going to be the next key level of support below that. That'd be the breakout. So that's this range right here, breakout range here. Obviously, all-time high 78.17 is going to be our resistance level. Above that, the extension on the weekly is going to be 79.38. So if we take previous week's candle and take our fib here, 77.15 will be our weekly pivot. 77.91 resistance, 76.40 support. Take a look at the daily. Something interesting that I always like to remind people of. Statistics say that when the Friday high does not reach the high of Thursday, there is a high percentage that we will revisit the low on Thursday on the following Monday. So that's something to keep in mind. We do have pretty much a pretty tight range here, but let's just take a look Um, we're not going to look just at Fridays. We'll look at Thursdays because it's an inside bar. So I'll just take this range here. So the daily pivot level heading into Monday overnight, we'll say overnight Sunday, we'll say 76.69. So if we're trading above that, we'll look to trade back up into 7,700, let's just say. Call it a nice even number there. And if we're trading below 76.69, we'll trade back down into support 76.39. We do have the daily 21 exponential moving average here, the blue line. So while we did dip below it on Thursday, we did recover it on Friday. And another thing that I was kind of monitoring here is that the 4 hour structure is still to the downside here. Obviously, we do still have a little resistance here. You can see we're below the 4 hour 21 exponential moving average. Would want to ideally reclaim that. So above previous day, above previous day high might spark that, get us back up into 77.36 ish area. But on the hourly, we are also still below, excuse me, obviously. So technically, um, we're above the 21 on the daily. So we've reclaimed a bullish signal there, but we still are below the 4 hour, and you can obviously see the 1 hour 21. So ideally, ideal bullish case heading into this week is recovery of the hourly 21, recovery of the 4 hour 21, and obviously then we can day trade that and look to lower time frames for some stacked EMAs for a bullish trend. But yeah, that's about it for today. Short and sweet. Thanks for hanging out. I'll see you in the next one.